Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 12th of February 2023. And yesterday we published our Gold and Silver Weekly Update for the week ending the 10th of February. Now today we're repeating much of the content of that video, save that we also wish to add that a number of subscribers questioned the reliability and accuracy of core CPI figures. Now, we in the UK have also moved over to CPI figures from RPI, though we still measure that, which stands for the Retail Price Index, really to have a global alignment for comparison purposes. The problem generally with these figures is that they do not accurately reflect the inflation figure for the perhaps majority of people, or those whose income is below the average. You see, the less income coming in, the larger the proportion of that income which is spent on food and necessities, which we all know currently have inflation rates running at 30 to 40% in many instances, and sometimes even higher. However, even attempting to address this causes other anomalies in the calculation. So when we quote the government figures, we're not necessarily stating they are accurate for everyone or even necessarily the majority. But providing they are not changed month on month in terms of how they're calculated, we do express them as a basis from which they can be compared each and every month and year on every year. So taking this into account, last week we saw gold and silver prices fall, but only slightly. Why? Well, we'll now take a look. Now, before we look more closely at prices and movements for gold and silver, as well as equities, oils and dollar values too, just a quick shout out to a video we produced on Thursday where we interviewed Greg and took his views on what he believes is behind the motives and aims of the World Economic Forum. It's worth a listen, and we've placed a link in the description box below. Now, going back to precious metals. Gold fell $1 last week, falling from $1,866 to $1,865, having hit a high of $1,890 and a low of $1,853, a fall of just shy of 0.05%, so really no change. In sterling terms, gold finished the week at £1,548, that's up £1. And in euros, it closed at €1,747, that's up €19. Silver fell 34 cents, falling from $22.37 to $22.03, having hit a high of $22.63 and a low of $21.85, a fall of 1.5%. Now that's 4 weeks of consecutive reductions in the price of silver. Haven't you noticed, though, over the past month, those pumpers have been out in force, and the YouTube idiots following them and regurgitating the nonsense, telling you that silver's on the verge of a miraculous hike up. The shortages are overwhelming, blah, 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 blah. We've said all along, expect precious metals to be under pressure from now on after the initial New Year euphoria. But we are of the belief, and according to our calculations, they will gain some speed and upward momentum as the year progresses, but more likely in the latter half rather than the former half of the year. Now, in sterling terms, silver closed at £18.28, that's down 29 pence on the week, and in euros it closed at 20.64 euros, that's down 0.11 euros. The gold to silver ratio rose from 83.4 to 1 to 84.6 to 1. Now, the difference between gold and silver's high and low was just $37, a large difference compared with the previous week of $98. And the difference between silver's high and low was just 78 cents, again a significant disparity compared with the previous week's $2.33. Now, we predicted last week that we anticipated to see gold possibly follow through with Friday's, that's the previous Friday's fall, and then consolidate a little, trading between 1800 and 1900, which it did basically throughout the whole of the week. We envisaged silver would trade between 21.50 and 23.50, And again, it did just that, but it tilted towards the lower end of that range rather than the upper end. Now, before we delve deeper into what happened last week, let's take a look at other financials. Bitcoin currently stands at $21,740. That's down quite a significant $1,621 on the week, though it's also had a significant rise in the prior 3 or 4 weeks to that. And although the equity markets were down last week, the amounts were relatively minor. The Dow Jones closed on Friday at 33,869. That's down just 57 points. The S&P 500 closed at 4,090. That's down 46 points. And the Nasdaq Composite closed at 11,718. And that's down 288 points on the week. On the negative side, oils reversed the previous week's trend and unfortunately closed higher. Brent crude closed at $86.39, that's up $6.45, and WTI crude closed at $79.72, that's up $6.33, basically wiping out the previous week's fall. The dollar index was stronger though and stands at 103.63, and that's up 0.72 points on the week. Now, the gold and silver markets, and frankly the equity markets too, were pretty uneventful last week in terms of opening and closing figures, but there was some excitement on Thursday when gold actually touched its week high at 1890, but then fell to its week low in less than 24 hours. Silver followed a similar pattern, moving from $22.55 to $21.84 in the same period. You see, the economic data coming out of the US was pretty sparse and uneventful and, dare one say it, relatively unimportant, if you can call it unimportant, with most figures really falling close to expectations. But this coming week should prove a little more eventful, as we have the CPI and core CPI figures on Tuesday and the retail sale figures on Wednesday. Now, in addition to that, we have producer price index on Thursday and the import price index on Friday. But it's the CPI on Tuesday and retail sales on Wednesday which are the ones to watch. And if you can only watch one, then watch the CPI figures. Because, frankly, to some extent, the reason there was not much action this previous week is because traders are looking forward to these figures to provide them with some sort of guide as to what the Fed is likely to do with interest rates on the 22nd of March, which is when they make their next decision. But it doesn't take a genius to work out that's still some distance away. And whilst there may indeed be a reaction on Tuesday, we frankly would rather wait for the March figures before predicting the next interest rate rise. Though, at this stage, there'll be no prizes for perhaps anticipating another 25 basis points increase. Now, technically speaking, with gold having touched the 50-day EMA before finding a few buyers, the downward momentum may still be in place, though again, we're not expecting any earth-shattering moves, unless, of course, the CPI figures are way off course. Now, markets are expecting the Jan figures to come in at 0.4%, with core CPI at 0.3%. If this is achieved, it would give us a CPI year over year to January of 6.2% and core CPI at 5.4%, continuing the downward momentum. Now, silver was weaker and hovered around the 50-week EMA. Again, the CPI numbers will have influence, so too will the dollar value this coming week. So where do we see precious metals heading? Well, providing there are no major surprises with the CPI figures, we expect both precious metals to be just a little bit on the soft side. So again, we envisage gold trading between 1800 and 1900, with 1775 to 1925 as outliers. We anticipate gold to trade much of its time during the week between this 1825 and 1875 level. Silver, as we predicted last week, has already regressed towards the $22 level, and this week we can envisage silver trading between 21.25 and 22.50 for the main part, but with $21 and $23 as outliers. Now tomorrow we will publish this video under a different headline and thumbnail, and just to refresh, we have put a link below for the video that we interviewed Greg on the World Economic Forum, and also, just in case you have missed it, our gold and silver price forecast for 2023. Meanwhile, thank you so much for listening. Please, if you haven't done so, do subscribe to the channel, press the bell sign so you're notified of our videos as and when they're published, and as always, we wish you a safe, enjoyable weekend and a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.